Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me. And if you're new, welcome to the Daily Gold YouTube channel. Every Friday, we wrap up the week for precious metals and we look ahead. This video is being recorded on the late afternoon of March 7th, 2025. Again, thank you so much for joining me. And this week, some very interesting action. So this is an important video. I got quite a few slides here, a few more than usual. And what we're seeing is that gold itself, nominal terms, really not that great, even though it rebounded. But in real terms, specifically gold against stocks and various stock market indices, that's breaking out. Gold against the S&P 500 broke out. It's now at a 4-year high. So from a 30,000-foot view, this is very, very significant, something we have been waiting for and talking about for years. And in addition to that, we're starting to see some capital flow out of tech and into precious metals. And if you look at the stocks, they've been a little bit stronger than gold during this rebound, which is a good sign for the sector. So a lot to take in, but those are the keys. Gold is strengthening in real terms, exactly what we want to see, because that eventually or immediately will be more bullish for the rest of the precious metal sector, silver specifically, and especially the gold stocks and the juniors. And secondly, looking at the gold stocks and the juniors, they, again, I hope I'm not jumping on too early here, but they have been strengthening against gold in recent days. So enough of me talking, let's get to the charts. So starting off here, this is a different first chart, and we're just looking at a 2-month daily candle chart of various markets. And these are markets that I like to track based on the charts here, these 2-month candle charts. So GDX, GDXJ, GOEX, which is a better junior ETF than GDXJ, in my opinion. SLVR, I think that's the best silver stocks ETF. Gold, silver, dollar here, S&P, gold against foreign currencies. So this move has been driven by dollar weakness. We can see this here. We know that because gold against foreign currencies has not been that strong. So we would like to see this strengthen for a better move in gold so that the move isn't entirely dollar weakness. Because we can see here, rebound in gold kind of faded at the end of the week. But if we look at the stocks, GDX, a white candle today, GDXJ even moving up above the big move on Wednesday. Same thing for GOEX. So that's what we're seeing here. By the way, S&P 500, this is a bullish hammer. So look for the stock market to rally back over the next week or two. And again, bullish hammers, you like to see these after a downtrend. For example, look at gold. Like you see, these are not bullish hammers. Hammers come after a downtrend. So this is a bullish hammer. These aren't really bullish. So again, look for the stock market to rally, but more money is starting to move into the gold stocks. Look at these candles, pretty strong here versus gold the last 3 days. Silver, would have liked to see more strength in it today. It's still just hugging around resistance here. So that's my 2 cents or 4 cents on the broad markets compared to each other. Let's get to the next chart. So this is what I'm talking about. Gold against the S&P 500. This is a 4-year resistance. I should have extended this back here. So it's breaking out. This is now breaking out. We have 2 closes yesterday and today at a new 4-year high. The weekly close, also a breakout. So maybe we'll need a little time to confirm. But at this point, it looks pretty good. And this is something that we've been waiting for a while. So this is a major breakout here. Same thing in gold against the NASDAQ. Actually, this broke out 1 day before this did, because tech stocks, money's been really coming out of tech stocks. That's something we see. And so this is gold against the equal weight S&P 500. So all the stocks equal weighted, and we can see slight uptrend here. Finally broke out here, pulled back, retest, higher highs here. So gold against the stock market looking very bullish. This, by the way, I think this is like a 23-month high, not quite a 2-year high. So that's a big story as far as what's going on. Money is starting to move out of tech and move into gold and precious metals. And this is something that Vince Lancy mentioned in the interview that we published yesterday. Towards the end of the interview, look for the chapters. You can see it on there. So next chart. Yeah, so this is just gold against the QQQs and tech. This is the equivalent to the 40-month moving average here. Look how well this defines the trend. Then it breaks here, 2012, plunges. The last couple of years, it's been trying to bottom, big move here, retested the low. It took a little time. Now it's pushing up here again. This is at, call it a 2-year high minus a month. But look at the moving average. Look at this thing, boom, here, even resistance here. Now it's above it. You'll see this moving average will start to curl up. So this is a major change. Money is coming out of tech and moving into gold. Very, very good for gold and precious metals. So getting to our normal first chart, daily candle charts, gold here, silver here, gold divided by silver ratio. This broke above 90 here, then it came back. So we'll see. I mean, does this mean that this thing is going to plunge down this way? Maybe it goes sideways. Ratio charts can be very, very difficult. So what we're seeing right now is interesting. I mean, unless this thing breaks back above 90, 92, it could go sideways. The one issue, as I stop myself, as another thought pops into my head, the one issue is if we are going into recession, it's going to be difficult to expect silver to outperform gold. So there's that we have to keep in mind. So here's silver, the daily chart nominally. I mean, this is just a mess around this resistance. We were hoping once it broke above here, it would move up to 35. No, it comes back down. Okay, now we're in a larger correction, like I said, for the sector. The crappy monthly candles, but then it rallies right back here. Now it's falling back. So this is just messy right here as far as the short term. Gold, we did have a nice rally, but petered out at the middle of the week. And this is why it's good to see the stocks doing better. Money, the last half of the week, money moved into the mining stocks and the juniors, looking at the junior ETFs, and out into gold. So now 28.50, I mean, that's the first support. So we'll see on a retest if this holds. If this doesn't hold, then it could come back down here, and maybe this is the 200-day. No, wait, this is the 150-day. This is the 200-day at 26.10. We'll round it up. So again, if this loses 28.50, then you're potentially coming down to this strong support area. So that's where we are for the metals. And yet, just one more metals chart here. So this is the weekly line chart for silver. I've mentioned this. I love the support here around 28, 29. I mean, 29 on the monthly. You can see it here on the weekly. Here's 28. And 28 is also the equivalent to the 400-day moving average. So this baby is coming up slowly, 27.70. So probably next month, this will hit into the 28s. And if we look at 28 in the silver weekly line chart here, which smooths out the volatility, look, it's important to look at candles and understand where the market's struggling, failing to hold gains, where is it reversing. But at the same time, we can smooth all that out by looking at a weekly line chart here. These are just weekly closes, and we can clearly see this is right at the high 27s, low 28s. This is really strong support here. Again, the equivalent to the 400-day, that's coming up right here. So this should be really strong support. And look, again, looking at, was a sell-off 2 weeks ago? I mean, is that retesting the breakout at 32? I don't know. I mean, any silver person or silver bull, we'd love to see that big, strong move like that, or even just back up to 35 or like that. I mean, the weekly line chart would gain that much more strength. Gold here, we can see this week's candle did not do anything to counteract the bearish engulfing from 2 weeks ago. The silver weekly candle was a little bit stronger than gold's, but it's got to move higher. So silver is just a little bit of a mess right now. Okay, now let's talk about the stocks. They have been leading, and the first thing I want to mention about the stocks: if you own junior stocks, you own larger mining stocks, and you're a mining stock picker, and you're not a subscriber, I strongly urge you to consider the TheDailyGold.com premium service. You can get it right here. Go there. You can scroll down to the bottom of the page to sign up. Very affordable, 6-month membership, and we do all of this in every update. So you can sign up immediately within an hour or two. You can learn a lot about our favorite companies and many companies at that. If you are a subscriber, thank you. I appreciate you and your business. Okay, let's get to the stocks. So here's one thing that's really positive. The GDX advanced decline line is in this chart. This is GDX. And we know that the advanced decline line for the market as a whole or any sector, it's a great leading indicator. Nothing is perfect, but it's a great leading indicator. We can see here, this was a positive divergence. Another one here as GDX is making lower lows, but it kept moving up. Here, this was a bearish divergence where you had a higher high in GDX, but you had a lower high here. Market made another leg down. Let's see what we have right now. GDX in correction mode, but look at the advanced decline line. So still strengthening, making higher highs. So the advanced decline line measures the cumulative participation in GDX. How many gold stocks every day are going up versus down? And so this tells us right now the internals of the market are strengthening, even though technically we're still in a correction. So this is a very good sign. Now moving on from that, so here are the weekly charts, GDX, GDXJ, SILJ. Another good sign. Last week I bemoaned SILJ and how weak the silver stocks have been. You have this important moving average here. It's held above it, held above it. I think last week I probably mentioned, yeah, this thing will probably break below it. But a potential bullish hammer on the weekly chart, so nice bounce there. Will face a lot of resistance here, but still, I mean, this could be a very strong bottom potentially. And we saw 3 weeks, is that 3 weeks? I think 3 weeks of bearish candles for GDX and GDXJ. Very strong candle this week, bounced right back. And for GDX, 42.50. I mean, if it closes, it makes a clear weekly close above 42.50, that's going to be very significant. GDXJ, of course, is a little weaker, but still, a weekly close, I think above 52, maybe 52.50, that would be really significant. And here we are, last chart here. As we know, the gold stocks and junior gold stocks, they're coming up on 4.5-year bases. You can see some of them here. Here's GDX, GOEX, which again, I think this is a better junior index than GDXJ because it doesn't have some of those huge stocks that GDXJ has that are in the top 10. Here's the XAU, and we can see, we mentioned a couple weeks ago, we're looking for a correction. Okay, that happened. And a week ago, we're thinking, yeah, the market could bounce, but we're looking for more of a correction. But the market in the last 3 days strengthened more than we expected. And so this was one of the signals here, again, the advanced decline line, telling us why the short-term trend is now probably up and maybe for longer than we think. And okay, I'm getting back here. You can see the thumbnails. These minor indices, they need to break these levels, which you can see in red, just above 40. You can see the February high here. Here's the February high. So we need to see the minor indices rally back and break above the red. And people, this is important to understand. Even though I was bearish on the market, and I talked about it for a couple weeks, and I thought maybe the metals and miners, maybe they could correct for a couple months, and the breakout won't be until later in the year. I'm still holding my positions because there's no reason to sell just based on a short-term or even a medium-term correction. Unless something gets really, really extended, really overbought, or really overvalued, or my breadth indicators are showing that the market is as overbought as it was here and back here, then at that point, there's no reason to sell because nobody can successfully time every move in the market trying to trade in and trade out. I don't want to do that. So that's why it's important to have a long-term perspective, and then you use technical analysis to help guide you where the opportunities are and pitfalls and where there's too much risk and things of that nature. So that was a lot. This was a long video. Thank you so much for tuning in. It was a significant week in precious metals. Leave a comment. Let me know what you're thinking. Would love to hear your thoughts. Hope you had a good week. Hope you have an even better weekend. Thank you so much for tuning in. I'll talk to you guys again next week.